World stocks hit all-time highs. Utility stocks are leading the stock market higher, and does that mean lower interest rates are ahead? High-yield bonds are acting as if stocks could pull back with a small bearish divergence. I'll explain what I mean. And gold could hit records if dollar weakens, but it can also hit records if dollar doesn't weaken, and I'll explain why that is happening currently. Oil is currently at critical support and could break down. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 10th, 2024. As always, please remember to hit the like button, subscribe to this channel, share this video, make any comment, ask any questions you like in the comment section. All of these actions is what keeps this channel going and also helps the algorithms find my channel. So thank you again for continuing to support this channel. If you're a subscriber, stay tuned. We have quite a bit of stocks to cover, various ETFs, large cap stocks. United Health Group looks interesting. We have also quite a bit of speculative securities, such as GameStop. It's back. Porch Group, Cloudflare, as well as several gold-related stocks. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market indicators, for which you can sign up at my site by going into the link in the description. You can see the lines on this chart. There's green, blue, red, and yellow line, and these are my indicators that we will be using. So today we will start with a unusual ETF. I don't normally cover this, but today is a interesting event. This is VEU, a Vanguard All World ETF. So it's all world except United States. So basically no S&P 500 in there. Looking at the weekly chart of this security, notice that we have hit an all-time high. So we just exceeded the high from September 2021 and previous high from June 2021. So a new record high for entire world is, in my opinion, a good thing. So with all of the conflicts, the negativity, and the actual war going on in the world currently, we have stocks at records. It shows that the market participants are discounting negative news, and they think that we will see continuous growth, continuous business, continuous improvement, and basically this is a very telling when all world hits all-time highs. I mean, what else can I say? It's a very good sign as far as entire world believing that we will see better things ahead. Not necessarily gloom and doom, but potentially we will see a resolution of the conflicts and potentially improvement in the world situation. So I just wanted to point that out. All world has just hit a record all-time high. S&P 500 is still slightly lagging the entire world, but not by much, really. These are all-time highs from March of this year, 2024. We're not even 1% away from record highs. This white line I drew in, it's a breakdown. Notice where I'm hovering from 12th of April. We had a kind of fall, and then we basically bottomed out and started to rise, and now we're again at near the record. So I'm fairly optimistic that we will see new records next few days, possibly next week. It's very much possible. So again, despite all of the bad news, the world being on edge, I'm hearing alcoholics from Russian in Ministry of International, they're literal alcoholics. Medvedev and Zakharova, if you look at their faces, they're very alcoholic-like people, and they keep threatening the world with nuclear weapons. So how many times can we threaten the world with nuclear weapons until we stop being afraid? Unlikely nuclear weapons are going to be used. However, of course, the possibility remains. Regardless, as far as stock markets are concerned, we're next to records. It shows that economic prospects are good despite all of the negative news. The only thing that I was able to find that was not optimal is this junk debt. Although, number one, we just hit record highs last Friday for high yield bonds. So as far as high yield bonds, the reason why I give a hoot about high yield bonds is because you can see that correlation. This is a correlation coefficient down below here. This is high yield bonds, and so correlation to the S&P 500 is very large. It's very positive. I notice that it spends most of its time in the positive territory. Occasionally we get this negative forays into negative territory, but right this instant we see a good high correlation between high yield bonds and stocks, S&P 500. So when high yield bonds hit all-time highs before stocks, notice stocks have not yet hit all-time highs, but the junk that just did last Friday, I said that that's a good thing. That's a bullish divergence. Last few days, basically this entire week, we're seeing high yield bonds kind of pull back, while S&P 500 continued higher. So it's a small divergence. I think we might see a slight pullback for stocks in the next few days, but I think the highs are going to be made very soon. Even if we pull back slightly, maybe we'll pull back to retest this white line that I drew in, that breakdown from April 12th. But overall, I think the road is open higher. So like I said, high yield bonds pulling back slightly, set up a very small bearish divergence, but how important it is and how much stocks will pull back as a result is not entirely clear, obviously. But even if stocks do pull back, I don't think it's going to be a huge pullback. I mean, even if we got this tiny little pullback towards this green support resistance line, it basically was bought. Notice this pullback back in July of last year. We got a pullback towards the green line. We kind of made an attempt at new highs. We failed, and then continued lower towards the blue line. This is where I bought personally as well in last October 2023. Right now, I think this pullback is done. I think we'll see maybe slightly sideways action, and then we most likely will see records again next week or so. So by and large, very, very bullish, very optimistic scenarios are opening up right now. I wanted to point out a fund that I follow. This is XLU Utilities. So utilities, they need to borrow quite a bit of money. They borrow more money than other stocks, other companies rather, and as a result they are more dependent on interest rates. And of course, the lower the interest rates, the better it is for utilities. So notice that utilities surged. I mean, this is a huge move. Look at the size of this move from mid-April until now. This is a a very nice 14% move for utilities. Utilities don't move that much, but this was a big move. Let's look at it on the weekly chart and notice that utilities are actually approaching records as well, very close to records, and the surge itself is quite, very strong surge. So to me, this shows that potentially the market participants are thinking that we're going to see lower interest rates ahead, and as a result, utilities are becoming more and more attractive. So perhaps that's the reason why we're seeing a surge for utilities. In fact, let's look at bonds. This is Treasury bonds, TLT. So notice on this chart, the breakout did occur back here in December of last year, but we had this very large kind of just corrective action into April. I think now finally we're surging. But what's very important is notice the way the indicator lines are curving down towards the price action, which is making it easier for price to get above the blue line. That's all we really need, is to get above the blue line. Once the Treasury bonds, TLT, these are long-dated Treasury bonds, get up above the blue line, we will consider them to be in an uptrend and we will be buying them. So we can also project the indicator slightly forward. This is simply an offset of my indicators. Notice that looks like we're going to be bottoming pretty soon, sometime in June, July. And I think that, so again, Treasury bonds moving higher would imply that Treasury yield, TYX, would be moving lower. So this is a little bit contrarian. I think I've seen quite a bit of reports that saying that, oh, we're going to have this high interest rates for longer, forever, etc. Not necessarily. I think market will just take care of itself. Eventually, the Federal Reserve will lower the interest rates sometime in the future, but I think the market is doing it already. I think we will see lower interest rates going forward, unless of course something happens and we just like break down from here, the bonds break down. I don't see it honestly happening. For example, we just had a 3 to 7 Treasury bonds go on a buy signal, so that again implies that we're going to see lower interest rates. So as far as TLT is probably the most volatile of all of the Treasury bond funds. And once again, the way the indicators are curving down, it makes me think that we're going to see a new uptrend for Treasury bonds, and by extension, a new downtrend for Treasury yields. So most likely we will see lower mortgage rates, lower credit card rates sometime in the not so distant future. Let's switch gears. We're right now looking at dollar DXY. Dollar currency index is a basket of currencies, including euro, British pound, Japanese yen, Swiss franc, Canadian dollar, and I don't remember, I think it might be Australian dollar and New Zealand dollar as well, but they're in smaller proportions. Biggest thing is, of course, euro, British pound, and Japanese yen. By and large, the dollar is currently in an uptrend. Dollar is gaining. Okay, gold should be losing as a result, but it's not. So XAU divided by USD, if this bottom part of this equation is getting bigger, shouldn't it pull this currency pair lower? Right now it's not happening, so I wanted to show you this correlation again. This is gold on the upper part of this graph, and dollar in the middle part of this graph, and the bottom part is the correlation. And it does look like it's all over the place, but notice this middle line of 0, and vast majority of the time this correlation is negative. So if dollar goes up, gold goes down. If dollar goes down, gold goes up. So right this instant, it's one of those unusual time where we have correlation which is positive. So we have currently 74% of the time gold and dollar are doing the same thing as of late. And notice that this does happen on occasion, but it does top out right around this area. So we're kind of getting to the point where this unusual relationship most likely will start to become usual relationship. In other words, dollar and gold should be moving in the opposite direction. So currently they're not. Currently we have both dollar and gold moving higher. For what reason? It's difficult to say, and usually I don't even worry about it too much. Like, what is the reason for things happening as far as various securities going up or down? Especially earnings is one of those notorious things where we have sometimes very positive earnings that are followed by stock collapse. So right this instant we're seeing gold approach records, and question is, will we see new records, or will dollar strength in the dollar finally begin to weigh on gold, and gold will roll over and at least trade sideways to down for a while? Because we had quite a run up for gold, obviously, and you can see that in February here we had a big run up, probably just because of all of the scary news in the world. Overall, things kind of been calming down, if you could call that calm, but I guess the negative events have been priced in, so perhaps we're done. So as far as gold and dollar relationship, right now I see dollar going higher, and once again I sort of trust dollar more than gold. You can argue with that probably, but for me I think dollar makes more sense to trust it right now. Gold is more of an emotional thing. However, it is definitely in an uptrend, so I'm not gonna argue with that. You know, we've been buying gold basically for a while. You can see this opportunities to buy gold at the blue line. So all we do is just wait for it to drop towards the blue line. We just buy it at the blue line. So this is the way we trade. It's pretty obvious. For now, again, I want to wait and see where this goes, but yeah, gold I think could be also going up together with dollar. So we might see this relationship continue. You know, it takes a little while for it to resolve into normal correlation, into negative correlation. We'll see. And I wanted to wrap up today with oil. So oil initially broke out here in April of this year, and really there was no follow through, there was no move higher. So we can see that we rolled over, we touched this red line just a few days ago, and I sent to my subscribers saying that if we don't bottom here, like we tried to bottom here on the 7th of May and the 8th of May. We tried, oh, by the way, happy Victory in Europe Day from World War II, celebrated in a civilized world on May 8th, while celebrated in Soviet Russia or fascist Russia on the 9th of May. Right now we see an attempt to bottom here in this red line, but today look at this big red candlestick. So we're seeing potential rollover. If this level at 77, it's pretty an exact number, it's 77.39 currently. So we're seeing oil, if it breaks below $77, I can almost guarantee you that we're going to see about $71 within the next few weeks if it breaks down. So to me this is great. I mean, oil going down despite all the tensions, it's quite telling. this means that traders just don't think there's going to be bad hostilities sometime soon, or perhaps those hostilities will just resolve themselves. So this is the picture of today. We're seeing oil lower potentially soon. We're seeing gold potentially trying to top out here, especially if the dollar continues to gain. We're seeing bonds could rally, and this would imply that that the interest rates will come down further. And we're seeing utilities rally, as I just already mentioned. Junk debt has pulled back a little bit, while stocks have continued to rally for this week. So there's a chance that we might see a slight pullback for stocks. So maybe something like this. Maybe we'll see a slight pullback, and then a new high. Something like that, possibly. What do you guys think? Do you have any opinions about any of the securities I mentioned? So again, S&P 500, junk debt, utilities, treasury bonds, dollar, gold, and oil. And if you have any comments, make a comment below. I thank you for watching all the way till the end. Again, don't forget to make a comment, like this video, share this video. If you're ready to sign up, head over to MasterChartsTrading.com. Sign up one of the products. I have 2 products and 1 bundle. Trading indicators are these lines on the chart. You can trade pretty much anything under the sun on pretty much pretty much all time frames, but there are some rules, and I will explain them once you sign up. Also, I have newsletters which I send out daily to my subscribers. For example, this week we will be covering all of this. We covered all of these various securities, and this week I will also send out a members-only video to the subscribers that would cover all of these stocks. So the best deal, of course, is to get both trading indicators and newsletters, and of course the best deal is to get the yearly subscription upfront. You pay $599.95 upfront. That's equivalent to $49.95 per month. If you sign up for monthly prices, that's $59.95. So you'll definitely save money. Of course, you can just buy them separately as well, but I think the best deal is to get both of them together. That's it for this week's recap. Again, thank you for watching, and have another great trading week. Bye-bye.